higher for longer, if that's the rate hike cycle, and will it continue, will it not continue? To talk about that, Karan Mehrishi joining us on the broadcast. Karan, US inflation data, what does it suggest? So far we've seen the FOMC minutes, and there was a consensus that no rate cut, but a rate hike perhaps in the near term. Is that still the suggestion? There is a tepid sort of moderation in inflation data from the US, quite still not in line with the expectations.
Shweta, thanks for having me. So I think the headline number at 3.7% for September is extremely robust for the US economy. As I can sort of analyze what is happening in the US right now, and that is where we should be looking at, and not at what the RBI is doing as far as domestic economy is concerned, because everything is driven by the Fed at this point in time. Now, given the fact that core inflation in the US continues to be over 4%, and the continued job numbers that continue to be elevated, it is a sign that the US economy is growing despite an aggressive Fed. What this means is that the Fed may have to raise rates further, with the Fed rate probably breaching the 6% threshold, while at the same time contracting its balance sheet and sucking out liquidity from the system. So basically, what the Fed is trying to do is that it is trying to pass a signal and stoke the market into believing that a higher for longer high interest rate scenario would remain. But if this happens, then the US 10-year government security yields will also breach the 5.5% threshold. As the earlier panelist was also suggesting, that this actually is bad news for Indian capital markets, because the yield differentials, which is equivalent to Indian security, are already running at an all-time low and is hovering at around 2.61%. Now, last time, Shweta, we saw this scenario happening was in 2007, just before the ramifications of the global financial crisis took us out. Since the RBI is not in a position to raise rates at this point in time, given the fact that next year is election year, and we are seeing the core inflation story continuously on a downward spiral, we are actually staring at an abyss, and frankly, nobody knows what's in store for the global economy, and not just the Indian economy.
So what are the critical factors that you're evaluating right now? Karan, good morning to you. Kartik here.
Hi,
are we just looking at crude being the one and only sole determinant of where inflation is going to go and how that is going to pan out? Or are we also looking at other trends like consumption in the US to pick up, which has also not happened on the back of high inflation? And China, of course, continues to deflate, and China is in the reverse low interest rate cycle. So apart from oil, are there any other red flags that you're really keeping your eyes on right now?
So I think, Kartik, we have to look at the evolving story in the Middle East involving Israel and Palestine.
That's right. So are we just looking at oil emerging from the Middle East being the single largest determinant of where inflation, where rates, and where global economies are headed?
So this is a black swan event, Kartik. I mean, this is something that we haven't really seen happening since World War II, I think. The Russia-Ukraine situation was already in the background. You also had a Taiwan situation with an aggressive China. Now you have the Middle East situation. So I think it will have ramifications on all commodities. And if you look at the headline number, I mean, both in the US and India, it's kind of moderating. But then headline number is a function of food and fuel. Now, if these commodities are sort of impacted by the situation that is now panning out across the world, almost in every region, then I think this number can just sort of move up and surprise the market significantly. We're already seeing yields tightening, and that is a sign that the market is actually unsure of what is happening and what will happen.
But Karan, even core inflation at over 4% minus the food and fuel is relatively higher for the US. So it doesn't look like crude is going to be a major bummer as far as inflation is concerned.
So Shweta, what is happening in the US is a different story altogether as far if you compare it with what is happening in India and other emerging markets. A lot of captive saving is at play in the US. So what happened was that during the COVID crisis, the federal government provided a lot of freebies and cash checks to households. So they're actually sitting on a lot of cash
Okay.
and savings. So that is sort of driving consumption in the US. And again, the US economy is also very strong because obviously corporate profitability was very high, and they were sitting on a lot of cash. So they are not sort of passing on the commodity price escalation to the household. So the situation is sort of benign as far as consumption story is concerned, and that's why we are seeing very robust job numbers as well as the core inflation continuing to be around
Right.
4%. But as far as India market is concerned, Shweta, I mean, my biggest concern right now is, and I actually have a question or two for all those market commentators who have been gung ho about the robustness of the Indian consumption story, that the core inflation number is actually falling since January 2023. I mean, that is this calendar year.
Okay.
In January, the core inflation number was around 6.05%. And yesterday, the number came in at around 4.53%. Now, that's a massive fall of nearly 150 bips. So core inflation is actually falling every month in India, and that is not a sign, not a good sign actually for the macroeconomy, and all the entire story that was revolving around the robustness of consumption and
Right.
how household sentiment is so strong is actually falling on its back completely.
Okay, fair enough, fair point. We will, of course, keep tracking those numbers, but Karan, we've run out of time on this bulletin.
Yeah.
Thank you very much for joining us here on News9.
Thank you.